All right, hey there guys, Sam here from TradeDevils.com and TradeDevils-indicators.com. All right, so here we are, Saturday the 5th. After kind of a crazy week here, I had a little time. I wanted to do kind of a follow-up video here. Not so much about any one particular indicator, just over the last couple of weeks here with some of the promotions we did. A lot of you invested into our tools and indicators, and we're getting a lot of feedback and some questions, and thought I would just go over a few things here that might open your eyes up a little bit to some of the things that you may not realize, maybe some of the hidden benefits of what you're looking at, and maybe give you some new ways to look at these tools. So let me start here. This is a template that I do trade often, and in my role here, often what I'm doing here, I switch back and forth. So I change things on a regular basis, looking for new combinations, perhaps a package that we would put together, testing things, how they work together. So my situation is a little bit different, but I would be perfectly comfortable trading with this template. But that's not so much what I'm not trying to promote any one particular template. I wanted to just kind of use the extreme volatility we've had this week to maybe show you a couple of things that you might not recognize. So first, let's start here. Let's start with just kind of a review here of the last week, right? And so this is a 15-minute of the MES here, right? I'm going to stay with the micros here. I think that's it's where the majority of you, as you've heard me say many times, I would tell you 20K or under should be in micros until you've proven that you can be profitable at least for 3 months in a row. Okay, so here we go. So this now, of course, let me just scrunch this up here because this kind of makes a phrase you've often heard in the markets. All right, we go up the stairs. All right, we go up the stairs, but we come down. In this case, we come down, as I was kind of joking with my guys in my Discord and in my room here. We go up the stairs, we come down the fire pole, right? I mean, look, these are. I mean, when the Fed starts, acting, right? Look at these sell-offs here. This is down the fire pole, right? And all Fed related, all trying to guess, well, what's the Fed going to do next, or how much are they going to tighten right now here, right? You think, oh, maybe it's not going to be so much, right? So we're screaming up this one. Here's another. All of these rocket moves, right? It's all Fed related, right? All of the moves down, that's all Fed related. Right, it's just the reality we live in, right? It's just, and the extreme volatility here, and the size, the range of these moves is what's it's not unprecedented. It's just if you've not been through this kind of volatility before, there's a temptation to look at this and go, oh my God, if I can just get on one of these. Well, that's easier said than done, but it's very true, right? So if you can catch one of these, and of course, for a day trader, the hardest thing to do is to stay in a trade, right? I mean, you get up 3, 4, 5, 6, 7, 8 points. I mean, how much we got here, right? And this is end of the day here. I mean, there's 500, right? I mean, 500 ticks down. I mean, these are going to be very hard to hold, right? It's very hard for a day trader because there's swing retrace. These are very hard to hold, but if you're trading a micro, right, maybe not so much, right? A little bit easier. So maybe you're taking incremental profit along the way, whether it's up or down, right? That's the benefit of micros. You can leave a runner. You're not thinking, oh my God, I'm up $300. Do I need to take it? If you let a runner, if you've already banked some profit along the way, and you let a runner go, well, you might catch one of these bigger moves, and it would surprise you on what you can see there. So with that said, before we leave this here, so all I've got on here, it's not without a few indicators. So I've got our market structure, right? So all the blue lines here, all the breaks of structure, right? And that's set to a 2 times the ATR on a 14 period, right? That's kind of the default. That's what we use. I've got a 200 period McGinley, right? Would be comparable to an EMA. 200 period McGinley, and you'll note here, but it's looking here. Oh, hey, we're up. It's the reason to have a 200 is because so many traders use it, right? So many systems and algos are tied to it. So you want to have a reference point for it. So you might look here and say, whoa, we're screaming up above. Oh, now we're below, we're above. Oh, what happens here? Oh, we're going down, now we're above again. Well, so this was a really challenging day, right? I mean, it's very hard to really know these are coming, and I'm trying to be mindful of not trying to play hindsight trader here. But so if we look here, so when we rocket it up here, and we're on the other side of the 200, and you've got the news driving the market, right? So you're thinking, God, Jesus, right? Look at that jobs report, and we're going to go vertical, right? We're going to go straight up. Well, okay, so I mean, this would be influencing if you're staring at your 15-minute, like, whoa, we're up above the 200. Well, then immediately we're down below the 200. Well, now we're back up above the 200. Right? I mean, this is extreme volatility, right? On a 15 minutes to go above, below, above, within maybe 90 minutes, if even that. I mean, that's, again, this is extreme, right? Now that's the employment report, so of course you're going to see extreme volatility here. But what I wanted to draw your attention to something here, and I'm going to probably jump around a little bit in this. But when you see this, right, and we're on either side of the 200, is the 200 really helping me here? Well, I'm not so sure. I mean, there's often times where you'll see the 200, right? You'll catch one of these pivots right damn near to the tick. But in this case here, where I'm on both sides of it, well, your first thought is, oh my God, in this level of volatility, right? Maybe I just won't be trading at all. It's a reasonable thought. But if you were trying to trade this here, there were some clues here. It's, again, I know it's easy after the fact, but I'm trying to show you some of the things that would help you identify, okay, do I want to participate in either of these trends? Because I got uptrend, downtrend, uptrend. Well, actually, pardon me, I've got, Jesus, what do we have? Up, down, up, all in the same day, right? It's just, and the range of those, just extraordinary. Okay, so now you're looking at this 200 and going, shit, man, I'm right smack in the middle. I'm up, I'm down, I'm up, I'm down. How's that helping me? Well, don't forget that you've got other tools here with regards to reference points. Well, so of course the first thing, right? I mean, staring you right in the face. I'm sure you guys see this, right? So this is the first thing I'm going to show you, right? So that's 50 to the tick, not approximate, not in the area, in the ballpark. That's to the tick. Now, note what else is here. Here's the order block. Here's the fair value gap, right? Here's the imbalance, right? So now, is that an easy trade to take? Absolutely not, right? It's screaming higher. That's very difficult to take that trade. But if you were thinking of taking that trade, right, this is where maybe you got a couple in micros, maybe 2, 3, 4 micros here, because the impact here in micros is going to be manageable. If I go up to that pivot, well, there's, that's $70 a micro. Right, but 14 points in a full size, right? Nobody's sitting through that, right? But so you don't have to give it all that range here. You might give it, maybe you give it 30 ticks, 20. Well, let's say there's $35 a contract. I mean, reasonable risk reward. You want to give it a little more, right? So that's all a function of your account size and your risk tolerance. But that's a much easier trade to take in micros than it is in full side, right? It's just another example of why I would encourage you guys to consider or mix the two, right? I mean, it's easy enough to mix them. Okay, so here's perfect to the tick, boom, boom, boom. Okay, well, there's one other thing to note here. When the 200 is not, we're not getting these, we're not tagging these. And you're kind of looking at, well, shit, if it's not the 200, what am I going to go to, the 800? Well, don't forget about your anchored VWAP. Now, of course, you're going to have to own an anchored VWAP, but we have a, we think this is as good as you're going to find anywhere. So mine is set to a hotkey. So I'm just going to, all I'm going to do, and this is a practice you want to get into. If the 200 is not helping me here on the 15-minute, well, I can't just put a VWAP on, right? That's not going to help me in any way because I want to look at the range. I want to look at the volume-weighted average price from this high to these lows down here. Well, lo and behold, if I put the anchored VWAP from my high in this range, look what I get here. Right now, okay. Now just look here, what I've got here, right? Because this is what we're looking for as traders. This is confluence. So from swing high to swing low, I've come back 50 to the tick. I am in a fair value gap, an imbalance zone here. So the assumption is this moves so quickly, it's not unreasonable to anticipate that there could be unfilled orders here. Now that's not going to be you and me, but that could very well be an institution, a whale, call them what you will. Right? Very likely you could have unfilled orders here from an institution that was looking to get filled here. Market moves too fast, so those orders are still in the book. Very possible. Could very well be people that defended this, that caught the shorts down here are going to defend. Very possible, right? No, what else do we know, right? An algo is going to fire there, right? Dominant to dominant, you're going to hit the 50, and algo is going to fire there. We don't have to wonder about that. We know that. Just like one fired here and here and here and here and here and here, everywhere you see, right? It's all just nothing but algos up and down. Okay, so I've got confluence here. Now, once again, can you take a 3, 4, 5 lot there in a full size? Well, you better have a 6-figure account. I'm not saying don't do it. I'm just saying the risk there is so high that I guess my point here is that it's much easier trade to take in micros, and you can trade multiples there. We start to come down, okay, start banking some profit, as opposed to, oh, I'm up 50 ticks, oh, I got to take that. Right, which is what you're going to do in a full size, even if it's 1 or 2, you're going to take it. Whoa, shit, man, I'm up $300-400. Well, I'm going to take that. Well, how much does that go, right? I mean, we just looked at that. I mean, that's just a free fall. And it's just the kind of trade where you're going to look at it and go, oh, shit, I wish I could have, man, I shoulda, woulda, coulda. Well, I should have held on. I could have, because I was never threatened. Oh, I woulda. Like, careful of that, right? So I'm just trying to give you something else to think about. That's a spectacular trade. Now, but no sooner do I say that, this has a target down here, right? That's the algo target. Well, you can see it here. I've drawn it up here, so the measured move indicator is going to have that target down here, but I've just drawn it as well so we can visualize it. So that day is progressing, and what are you thinking right here? As this starts to go, you're thinking, oh, baby, right? We're coming all the way down, right to target. Well, not so fast, right? It's got to clear a few things. We got to clear that pivot, right? Doesn't even get there. Got to clear that pivot. We got, we got a little, there's a little gap down here. We've got a big demand zone down here. We can see what that's tied to. All right, I got to go way back here. So here's the last demand zone here that led to a break of structure. So I got definitely potential support there. It's just potential demand. Let's say it the right way. That's potential demand down here. Look what happened the first time we tagged it, right? Right to the tick, right? So we're going to come back here. You'd be thinking, oh, shit, well, we'll come back to it. Well, as we get down here, all of a sudden, now this is going to be confusing to you, particularly if you're out on the 15-minute. Because what are you thinking here? You're thinking, oh, wait a minute, now look at this. Oh, if it's going to retrace, I know right where I can get another one. Right, I can get another one in here. Look at this, we blow right through that golden zone. Right, so the algo, and there would have been one here because I have enough distance. So if I come back here, the algo at the 50 and the algo at the golden zone, both blown out. So while this algo is still in the market, right, and will stay in the market until there's a close on the other side at 65, it's going to stay in the market until it gets that tick, gets that target, or it breaks that 65. So this one here, you'd have been thinking, oh, wait a minute. Now we're breaking on this side, so you'd be thinking, oh, wait a minute. I didn't get target here. So now does that mean the next time down here I got to take this golden zone because I'm looking for that? Well, you'd be thinking that. Well, now in this particular case, because it's Friday, right? You run out of time, right? So you'd be thinking, oh, is that what I got to do? Is that what the market's doing now? Oh, so it's just a battle between these two. Well, yeah, every day, every swing is a battle between these two algos, right? Because they never turn it off. It's always there at every degree. So of course, yes, whoa, this guy's broken. So one of them breaks. So the next time down, you're thinking, oh, well, Monday, if we come down here, I know the algorithm's going to fire there. So I've got competing algorithms. Do you see the issue here? This one here's got a target down here. This guy is going to be looking to buy here with a target right here, right? So who wins? Well, I mean, reality is we have zero way of knowing. None. Who's going to win that? Now, we can use the tools and methodologies and indicators that we've designed to try and help you with that battle. But at the end of the day, nobody knows. The people behind this algorithm don't know. They don't care, right? It's just 'cause they're going to get it. Eventually they'll get a series, right? They won't care, right? Trust me, they do. They don't care. They make plenty of money. But this is really challenging because you're thinking, oh my God, what down, up, what? Right? It doesn't make sense. Well, okay, given the volatility, the macro background, this level of volatility, you can probably talk yourself into getting some insight into that. But it's confusing. And if you're trading on the 15-minute, this would have been you'd have no way to anticipate that other than, oh, wait a second. Wait, what, that's a lot of wick rejection down here. Right? If we zoom in there, you're thinking to yourself, ooh, Why can't we? Boy, we had this right off of news. That's news driven, right? We're coming down here. Why, if this is such a harsh sell, and we're working off of the algos driving this, why am I stalling here? Why the wick rejection down here? Well, I mean, why? It's because there's demand there, right? I mean, it's showing it to us. But there's just no way you would have known we were going to rally back that far. We went all the way back to the open. This is where this was from the low. We went to the open. We went 70 plus S&P points. Counter trend. Astonishing, right? So you'd have no way to know other than, wait a minute, something's happened down here. Why are we not rolling? Why are we not? Just a little retrace? Why aren't we doing that? Right, confusing. So let's pick it apart here now that I've really drilled that point home. Okay, so let's go look here. So here now I'm on my favorite, my preferred. This is my tick size that I like to trade. It's not the only one I trade. It's just what. This is kind of my default, right? This is where I'll start. So I'm looking at the 4,500. So here we have here's the report news, right? So all the craziness that comes out with that. So and this is very typical. So going into the open, right? We go straight up. I would tell you, 8 out of 10 days, the initial move into the open is likely to be faded, right? So we go up as soon as we open, we go straight down. Now, so you might have been thinking, oh my God, strong. Oh, where are you? We're here. Strong jobs report. So when this retraces, oh yeah, we're definitely doing something like that, right? You've been thinking that, right? I mean, that just would have been. I'm not saying right or wrong. That would have been just the natural tendency to think, oh my God, we've had massive. The Fed's going to have to continue to work. So swing, retrace. Oh, I'm going to take that because that's where we're headed. Right. I mean, so when we get here, there's got to be evidence. There's got to be confluence, just like we looked at over on the 15-minute when we had all of that confluence at that pivot at that 50. There's got to be more here to suggest. Oh, well, okay, I see it. Right. Okay, here we go. Oh, we're stalling here. So maybe here you're thinking, oh, we're just going sideways here. So and is it resistance? Look, it's just wick. Oh, here are we starting? Right, is there anything below here? Now that's what we're going to basically get to. If I can shut up long enough here to make some progress here, that's what we're going to get to. Is we might look here and you might have been thinking to yourself, okay, well this looks like we're stalling here, but wait a minute, look below here. Are any of these telling me maybe right here you had a thought based on the volume zone oscillator? Oh, it looks like volume's accelerating, but we don't break the -5. We stall on it, and look at the histogram here. So we have in this entire move, and we'll make this point later, in this entire move up here, there's been not a single retracement equal to 2 times the ATR. Well, here's the devil's friend, right? That's set to 2 times the ATR here. So I know I've not had any sort of a retracement here equal to twice the average true range. Right, which is why this stays green the entire way we're climbing higher. Because just like the zigzag in here and the zigzag oscillator, they're tied to 2 times the ATR. Right, of 14 period. So because of that, I can see, hey. Right, if this was going to turn here, there would be a break. I mean, you can see it here in the devil's friend, right? Here, I know I've gone 2 times the ATR. Oh, okay, maybe we're starting to go. All right, maybe the next retrace is the one I want, and now we're going to go get that target. Very easy to be thinking that, but the tools here, the indicators that we're giving you to try and help make those decisions that we use every day are screaming at you, no. Even though you're thinking, oh God, let's see if I think a strong jobs report, retrace to the golden zone. Okay, yeah, there's a few wicks through it here. Oh, maybe that's just a big round number here. They're after that 37.75. Maybe that's it. Oh, so it's just wicking up to it. It'd be easy to talk yourself into that. You're sitting right here going, oh yes, yeah, there it is. Oh, look, the VZO is going red. Oh, wait a second. All right, so beyond that here, so just visually, what else do we see here? Which is kind of my destination here. Let me get all of that off here. What do we see here? Well, there's the 21 McGinley. There's the 55 period McGinley River. Now, on the retrace after this, because you're thinking, right, would very reasonable to think, boom. Now, what we literally tag the edge of the 21 McGinley and the 55 McGinley river, right? Which is just, that's the McGinley in the middle. This is the high and low average, right? So you get the zone, right? Thus the river. We tag it. Now, if we're going down, we're gonna blow right through that. And if not right off the bat, we're gonna get through, retrace, and right, we'll kind of do it in that fashion. But we don't even break it. We literally don't put a tick on the other side of it, and the McGinley just keeps climbing. Look at the cum delta here, right? These little pushes. Look at the center line, right? Very, very important, right? So if you're using the cum delta, look at the center line of the Bollinger Bands of the cum delta, right? We don't even push under. Right? So now, pardon me, volume zone oscillator is accelerating here. Buyers are coming in here. Now, as we get up here, now what are you thinking here? Oh my God, it's going to be a massive up day. We've just gone 68 S&P points. Oh man, well, whatever, right? Bad news is good news. Oh, off we go. Well, slow down now. We get up here. So what's the first thing that happens when we get up here, right? Now take note of the time here. You didn't get a perfect one here, but you definitely got a trade. So we hit that at 10:31, right? So now you see it's a little hard to see. I know that. Right, so here's the 50, here's the golden zone, right? Here's another 50, here's another golden zone, because they're from different pivots above, all right? So I can just tell that, and I know that they're large pivots given the space between the 50 and the golden zone. Same here. I know those are from much higher pivots to create that space between the two. So I'm hitting the IB high here at 10:30, right? Now anyone who knows me knows that is my signature trade, and right, we're going to go from here. What did we get there? We got 42 ticks. Now, I will say this, right? For the first test IB high or low, that's not a micro trade. That's a scalp. Now, sometimes it can turn into more than a scalp. You can go from coast to coast. But for the most part, that's the one trade that I would advise you, right? Again, based on account size, that if you want to scalp something, or you can't scalp in micros, right? So you're going to have to scalp in the full size. So it's going to be a tighter stop, and you're not after as much. I typically will do it in a 3 lot. I'll have my first 2 will be anywhere from 3 to 5 ticks, right, is what I'd be looking for an exit, and then I would leave a runner, right? Ideally, the runner heads either to the McGinley, to VWAP, some sort of a strategic target that you would have, and you would kind of trail with a stop so you can get max out of it. But for that scalp here, if you're only after 5 ticks for your first 2, so you're putting 100 plus in your pocket here, and we get out of this, let's see, your stop would be there's let's kind of keep it on the other side of it. There's a 15 tick stop. That might be too much. Right, looking to get to this prior high, right? It's from the prior day. Well, there's 3 to 1. All right, you're getting here again. You wouldn't do this in micros here, but you've got enough distance here. What stops it? Right, it runs into the 50 from this pivot. Swing 50 up. Now, so do you see what it does? It runs into a buy-side algo here. Here's the swing, here's the 50, here's the target. Now, as it's clearing that target by a couple of ticks, what does it run into? It runs into a 50 from a higher pivot. Right? So here's the swing, here's the algo. Remember, it's right down to the 30-second. You're going to find it. Or should probably find it down to the 10-second. Swing, retrace 50, target hits another 50. Now, once we get up there, again, I'm just here, just trying to give you a few things to note here. So look at the volume zone oscillator, right? Look at that. Here, okay, with the cum delta. What's an easier way to do this? Here, let's go this. Okay, so here's the push up. Now we're outside of the Bollinger Bands on the high. As I hit a target, as I hit a 50, I'm also right at the IB. Right, I've just tagged it. Here's the retrace. Are we going to go? Well, if we're going to go, right, there's going to need to be buyers. Why is the volume zone oscillator, why do I have such extreme divergence here? Why is the cum delta all of a sudden fading lower? Now, what happens right here? Right, for the first time since that low, I get a retrace equal to 2 times the ATR. So I get, it's hard to see it here, but I get a change of character right there. Right, because I've gone to, right, so that's what triggers that little dashed line here in the market structure. I've gone 2 times the ATR. Now look at the cum delta. Look at the VZO. volume zone oscillator. Now we're breaking -5. Okay, so sellers are coming into the market. Look at the McGinley, right? We've just crossed red on the McGinley. Look at the devil's friend, right? So we know we've gone 2 times the ATR. Now here's the devil's friend on the other side, right? So we go, now look here at what happens. We go all the way down, and it's not until here where we get a retrace equal to 2 times the ATR, right? Which creates, so there's the change of character. Get it? Pop up. Right, look at the McGinley. Oh, are we going to go back into the IB? Are we going back in? Nope, rejected. Oh, maybe we can get in this time. Nope, rejected. All right, again, I'm going to tell you this, and hopefully you don't have to take my word for it. You see it enough, right? These IB high and IB low are the 2 most important levels every single day on the board. I don't care what anyone tells you. IB high and IB low are the most important because it dictates what kind of day we're going to have, right? If we're going to stay within it, if we get outside of it, then we got a trend day. If we get outside of it and we hold outside, trend day, right? Brings in the higher time frame traders. If we stay within, right, they're not interested. Right, so it's very common, right, without news or something to drive the market or something that's something that happened in particular equities or a sector where we'd have a range, we'd have something that would trigger a move outside of the IB. It's very common, right, for particularly in this level of volatility. If we don't have a trend, we'll break on both sides and we'll just kind of waffle around that first hour of trading, right? So it's unbelievably consistent, which is why it's so important that you know where they are. And I would tell you 90% of S&P day traders don't even have it on their chart, right? Retail doesn't even know about it. They don't even know what it is. They don't. What's the initial balance? I get that all the time. Right, it's not like it's a secret. It's just that no one's explained it to them. Okay, so here now we come all the way down. No retrace equal to 2 times the ATR until I get right here. Oh, now we're going to try again. Now look what happens here. First, look, because the clues are there. This is what I'm trying to get to. The clues are there. Look at the cum delta right now. First, okay, what time is it? Well, 11:30. Europe closes. Okay, are we going to have a big banging sell-off on the afternoon? Well, if we were, wouldn't it be okay? 11:30. Europe closes. We kind of go into the doldrums here. It's not as pervasive as it once was because it's not. 95% of this is all done by algos anyway. So it's not like, oh well, all the traders are off the floor. They're having lunch, so volume's going to dry up. Yet it does. You will see that from the it's consistent that things will slow down middle of the day till about 2 o'clock, and then if you're going to get a counter trend, that's often where you'll see it start. Where do we start? Where do we start this counter trend? Right, here's 2 o'clock right here. There's 2 o'clock. The low is 2:07, and then we rip right all the way back up. Right, again, it's crazy, right? So let me get this off here. So there were clues though. Okay, so if we're going to start to come down here, let's do it this way. If it's going to be one of these big sell-off days, boy, wouldn't you start to think that, boy, this doesn't make sense. Why are we essentially? What are we doing here? We're just going sideways. We just get stuck in a box down here. We get stuck, right? So it's not just another, right? So anyone in my room knows that, right? I will consistently put up a picture of a hook with a fish with a hook in its mouth because who's down here selling? Right, breakout traders. Right, how'd that go? How'd that go for them? Right, it's never, ever, ever. Well, here's one thing I can promise you: professional traders will never, ever sell the low or buy the high. Ever, never. They'll never do it. So why are you trying to do it? Because, right? So it's just human instinct. It's just your little greed glands start to fire. Oh man, that's gonna break. It's gonna really go. And right, occasionally, right, you'll see it. I'm telling you, that's the single worst place to enter the market, right? Just like this would be the single worst place to buy the market. It's the high of the day, low of the day, right? That you never want to enter there. Okay, so now as we come back up here, well, all of a sudden, now look here. Let's look at the histogram. Where's all the if we're gonna go, why are we chopping so much? Look here, let me zoom in here just to kind of visually clue you into this. Look at oh man, that's too much zoom. Okay, let's look at the swing structure here. Remember, every time the devil's trend swaps, right, we go to the other side, we've gone 2 times the ATR, 2 times the ATR. Oh, we're just in a chop zone here. Chop zone. Look at the difference between the size of the swings prior to when we get here to this zone. Okay, I get one last push down here, like, oh, okay, this must be it. This is going to be it. This is definitely going to be it. that's when we're going to really free fall. Right. Well, okay. So you might have thought, okay, here it comes. Here it comes. Okay. Oh, they can't get back into the IB, right? This is the access back into the club, right? Oh, can I get in? Can I get in? Come on, man. I'll slip you 100. No, they're not getting in. They're getting denied access. That's why that's so important. And if you don't know it's there, you'll do this. You'll buy right into it. Oh, retrace. Oh. Right, there's not enough room here until we get on the other side of it, because that is natural resistance. Even though they get through here, right, they're quickly rejected. Can't get back in. Can't get back in. You see this every day. This is a battleground. Also, terrible, terrible place to enter right here. Terrible, because it's so algo thick. You just have no idea which way we're going here. It's got to clear and get inside, or clear and break outside. So then it becomes the resistance on the retrace. Same thing above. If we break outside, it becomes the support. Never a place to enter as well, because it's so thick with algos. You don't know who's going to win that. Right, careful there. Right, and now it can be, if you're below and you're coming back to it, can be a decent place to continue on with the trend. But if you're just flat in the market, it's not a great place to be a buyer. Right, didn't work out here, didn't work out here, here. Oh, okay, finally got it. How much did you lose here, and here before you finally got one? Now, just to make it more difficult, sadly, right, because I was watching this, once we finally do break, look, we don't get a single pullback, right, equal to 2 times the ATR. What you would have liked to have seen is something like that. A pullback, test it from above, and then we go, right? Doesn't do it, doesn't give it to you. Right, reality of trading. Right, sometimes the market's just not going to cooperate. So it's just, look, that's 2 times the ATR. Right, we don't even get close. All just straight line. Look at the center line here. The one little pullback I get 3 bars down here. I don't tag the lower end of the Bollinger Bands here, and look at the VZO. Right, I can't even break the -5. Now here, this is advantage to why I still like having the histogram on here, because I can visually see this divergence, right? I get a very clear, as opposed to if I were just, and you could do it, if you're just using the devil's friend and the ATR, it's telling you the same thing. I just don't see the same. I don't see that divergence the same way that I do here. Now, if you're using the order flow zigzag, it's going to put that line on it for you, so that whether you had this or not, right, that line's going to show up. Just like these are going to show up as divergence. But there's something, I think, beneficial to having it reflected down here, as well as seeing how this is. Oh man, we're in chop zone. Again, we've gone from very clear up, very clear down. Here's the middle of the day chop, and then now we go very clear uptrend. Okay, how am I doing? 33. Okay, let me stop here, because I got to do this in parts here. I'll go for 2 hours. Okay, I'm gonna make this part 1. I'll be back. I didn't even get to what I wanted to get to. Okay, I'll be back in part 2 in a second.